Assalamu alaikum. Welcome to question 2 of ATX revision kit. This is your financial year at 2023. These questions are relevant for your March 2025 ATX exam. I picked up these questions from the ATX latest Kaplan kit, and question 1 I have solved, and it's there on my YouTube channel. It's there for all the subscribers. But from question 2 onwards, this question and the remaining, there are total 70 questions in the kit. These questions will only be there for the members of my YouTube channel. It will not be available for the general public. It is only available for the YouTube members. So let's start with question number 2. So question number 2 is very important again from the point of your exam. Why? Because question 2 tests various areas. Let me tell you the areas that it is testing you on. Okay. So question 2 is working on sole trader cessation. This is an area, very common area when we are ceasing our sole trader. Okay, when we are ceasing our business, this is one area that is asked in this question. Next, even the revision kit tells you, if you see the opening paragraph, opening few pages of revision kit, it tells you to do this question. There are some very important questions, out of which question number 2 was marked as an important question. Then TOGC, transfer of going concern. Next, IHT. There was an IHT impact of date of death. When we are dying, what is the IHT impact? Again, a very quite famous question which often comes in your exam. It's a very frequent question. Fourth area, your investment schemes, VCT and EIS. What are they? Venture capital trust and enterprise investment scheme. Next, we have ethics. See, ethics is a question which always comes in your question number 1, section A. It's always tested. You can't skip it. So make sure that you do this question. Okay. Now, remember ceasing of trade and transfer of going concern. These are very popular topics in exams. Okay. And also, you will have IHT in this question as well as with ethics and investment scheme. Now, so this is the overall area. Now you know the area. Now, in this question, please make sure that you read the question and come prepared so that I don't read line by line for you and waste the time. Okay, it is about Ziti. Okay, he's selling his business. He might be gifting something to someone who is dying. Then he's investing in some schemes. And what is the impact of inheritance? What is the impact of VAT? So EIS, VCT, VAT, inheritance, and net proceed after income tax and capital gain tax. When we are disposing the business under 2 alternative models. So we know the overall picture. And today is 1st June 2024. Okay. Now, these are the areas you have to cover. And in this question, I assume you have read the question. If you have not, please go back and read the question, pause this video and then come back because I'm going to solve the question. My part is the next step. After you read the exhibits, everything, we are moving on to the next part to solve this question. I assume you have read the exhibits and marked the areas where you are finding it difficult. So when we solve the question, we'll go back to the exhibit and I will mark the important areas. Okay. So now you have been given 3 exhibits, and exhibit 3 is the area where list of requirements and the marks are given. Okay. So now you have to read in detail exhibit 1 and 2. the information is there. So first we'll go to exhibit 3 and read the requirements, because I always start with the requirement first. Okay, so here you are supposed to prepare notes. So your professional skill marks will be tested in this area. Okay, make sure that you know the format of notes and all everything, and it had to address this following: A, B, C, D. Okay, see, when we are selling the business, we need exhibit 1 and 2. They have already given you. Okay, what do you have to do? You have to calculate. Okay, first is calculation. We are disposing. Okay, there are two possible methods of disposing, and when we are disposing, we have to calculate. So we have to calculate Ziti's taxable trading profit from 1st April 2024 onwards, and income tax thereon. Any CGD also, income tax and CGD. You should include. See, whenever they say you should include, that means you should include. If you don't include this, you are not going to get the marks. Remember, 17 marks. Highest number of marks is usually for where you have calculations and explanations. So you have to explain, not just calculate. If you have any CGT reliefs, then you have to give a summary. See, when we are doing lengthy calculations, it's always good to give summary. You are going to get a professional skill marks for it, even if they don't ask for it. Since here they have asked you, you have to give. Okay. Post tax cash position. That means after you deduct the tax from your proceed, what is the cash position? Any necessary assumptions. You will be, don't say you don't have any assumption. You should have some assumptions. Next, second part. Whether or not VAT will need to be charged on both alternative or not. This is about VAT. 5 marks. Okay. Next, again we have exhibit 1 and 2 same. This is about inheritance tax. So you have to calculate inheritance tax of on his father's death. This is between 2nd June and 30th June 2027. 24 to 27, 3 years. Okay, it's 3 years. Not that whenever they say you should include an explanation of any inheritance tax relief. Okay, so when we are calculating this inheritance tax, assume they will sell their business on 31st March 2025. Best way to approach this is to identify the particular days on which the inheritance tax liability will change, for 9 marks. Next, you only need exhibit 2 and is for 4 marks. It's about comparing VCT and EIS. Okay, you are investing 25,000 in either in this tax year, and you have to give the income tax implications. This is pure knowledge. Straight away you can answer. You don't need the reference of any other question. Next is ethics. Even this also you can answer. 5 marks. This is about some HMRC error. Okay, so you have to talk about issues arising and actions that you have to take for the HMRC payment. So now first we'll go and start with, if you, okay, exhibit 1. So exhibit 1 basically is a letter. They've given you some information, and exhibit 2 is mostly calculations and all they have given you. Okay, so now there are two possible methods. First one, close down the business. They will sell the building and the equipment on this date. That means they are ceasing trading. Second one, they are carrying on the business. They are selling it, but they are carrying on with the business. This is like transfer of going concern. Okay, so they will continue to trade until this date, sell the business to the sister, who will then operate it. Sister will be charged market value of 300,000. Okay, for all of the assets except the building. Except the building, everything else will be charged at 300,000 to the sister. There is no gift holdover relief claim by the sister. Okay, now appendix is attached in appendix 2 of all the about income and all. Now, I have plans to purchase a rental property which was let out from 6 April 2025 The annual taxable rental income is 52,000. That's why you have to read all the information. Sometimes you get most important information in some hidden. Okay. So this is one source of income. That is 52,000 from rent. Now the dates are very important. Okay. So all this information you can read about father becoming ill and they have decided to sell the business. All those things. Now next. So now there is only one lifetime gift of the father apart from that business. Okay. That was some shares to some trust. Now this shares has a market value of 190 and it did not qualify business property relief. So you don't have to worry about it. It did not qualify. They straight over told you. So do not go and look out for the information to see whether it qualifies for BPR or not. Okay. It's wastage of time. So this is chargeable lifetime transfer. You need this for your nil rate band. That's why. If it's within 7 years, you need it. This is on this date. Date is given for you to decide the 7 years rule. Now, appendix 2 is given. 3 asset, goodwill, building equipment. You have been given the cost. Market value of the date of gift has been given. Expected value on 25 and 26 has been given to you. All these are excluding VAT. So you don't have to work out on finding VAT now. Financial position of the business. So now business generates trading profit of 5,000 per month from this date, 1st April 2024. Then it will increase to 6,000 per month from 1st April 25. The only tax adjustment is capital allowance. Tax written down value of the main pool is nil on this date. Purchase business equipment for 6,000 on 1st of May. No disposal. I am happy to make any elections which will be beneficial from a tax perspective. Okay, next tax efficient investment. So this is about EIS and VCT. Okay. So you have to compare basically. You are investing 25,000. You are planning to keep them at least for 5 years, the shares. Now, payment. So there was a reason you have received a payment of 5,000 from the bank. You do not know what it relates to. It's an error. You're assuming, but you're keeping the money without informing them. Okay. This is ethics. Now, so these are some additional information. Both are resident and domicile in UK. Okay. The equipment is movable and no item has a cost or market value of more than 6,000. Business is registered for VAT. No election has been made in respect of building in relation to VAT. Why is this? This is regarding VAT. If you have studied VAT very carefully, you know there is an election for you to charge VAT. Fair exempt from it. Now, so Exhibit 3 is basically the works. We have gone through that. So we have finished with the requirements. Now, let us go through the question, the answer. Before we move on to the answer, please always check the pattern of the answer, the way it is answered and all, okay? Rather than just making your answer perfect, you have to know how to structure your answer. How do you start? How do you write? How do you put the numbers? Calculation first, numbers where? All these things are very important, especially because you're working on a CB platform. You're not writing it any longer. Okay, so these are some key answer tips. Okay. So before you this thing, this is in your mind, okay? You don't have to write all this. I'm just taking you through. Okay, this has 4 parts. Once again, part A is when we are disposing and business on 2 dates, 25 and 26. You have to compare income tax and CGT. Okay. Remember, this is a very demanding part of the question. This is the hardest part of the question. Therefore, you need a methodical approach for it. You can't just go in any order. Okay, and you need a sound understanding of capital allowances. Why you have to adjust it from your trading profit? It was not adjusted. So your capital allowance knowledge is also tested here. This knowledge of capital allowances and all are your brought forward knowledge from tax. It is not so much in depth in ATX, but it will be brought forward because it was there in tax. All your tax knowledge is relevant in ATX. Okay. Next. So regarding CGT, Ziti's father gave the business to Ziti back in July 2020 and claimed gift holdover relief. You have to consider this when Ziti is disposing. And also whether business asset disposal relief is available or not. It's a capital gain tax relief. You have to think about it. Okay. And for VAT, there are 5 easy marks for VAT. When we are seizing the trade versus when we are seizing the business as a going concern. What is the impact on the VAT? This is a commonly tested. So make sure that you know the conditions. Commonly tested. Common area. Part B, inheritance. So if he is to die. So there are 2 main factors that is affecting IST liability. One is business property relief. The other one is TAPA relief. Because his time given 3 to 7 years. Next, C. This is also again easy to score. Because comparing this is a knowledge part, pure knowledge from your textbook. Next, D is ethical. Once again. So now, so this is how a notes for meeting looks like. This you have to set out. You are going to get your professional skill marks. This is your communication skill marks. You are supposed to write a notes. This is a note for meeting they asked you. How do you start? Prepared by whom? What is the date? Date they have given you on the first line of your exam. Assume today is 1st June 2024. Prepared by whom? Always take yourself as a tax advisor, tax senior, right? Prepared by you. And what is the subject? ZT. If this is, there are various issues. A, B, C, D. So if there are various issues, don't write lengthy subject. Don't write all the requirements. And don't copy paste the entire requirement. You can't do that. Doesn't look nice. Doesn't look neat. Subject should be 2 or 3 words. Keep your subject always short. So if there are various issues, you can write always like this, various issues. Don't write VAT, inheritance, transfer of business, CG. Don't write all those things at the X. No. So first, order. Order is very important. A, B, C, D. You might attempt the question in any order, but when we are preparing it, when this is easier in CB, because earlier we have to write, cut, we have to leave some space, assume how much space we have to write, leave for A. For example, there are 4 parts, right? A, B, C, D. Let's assume I'm starting with C first because it's, let's say, easiest one. EIS versus VCT. I might be writing C, but for me to write C, I can't start with C immediately, right? I have to start with A, B, and C. But I'm keeping some space for A and B. But I have to assume, there's an assumption that I had to made earlier when it was a paper based. How much space I have to leave for A and B. This is very, what do I say? Sometimes I might leave so much space, sometimes I might leave less space, cut. I have to cut often, keep keep more space. So it's an assumption. But here, since we are typing now on a CB platform, it's very easy. You can always press enter and go to the next line. So you can always start with C, doesn't matter. Then you can do A, then you can do B. Now it's very easy on a CB platform compared to paper based. So you don't have to worry about the order. But some questions are dependent on each other. You have to understand the nature. For example, in this question, C and D, you can write in any order. D is ethics, C is comparison of VCT and EIS. But A and B, even A and B, okay, if they are tax related, if you need If the position of the tax in A is affecting B, so you have to see that sometimes. Now, so let's start with A when we are selling the business. Okay, what is, you have to write the topics like this. You are going to get professional skill marks for this. This is where you are going to get your professional skill marks. Let's say 1. What is the topic? Sale of the business. You can take it from your requirement straight away. What is the requirement says? Go to exhibit 1. If you're not getting there, go here. You see, sale of the business. Exhibit 3. A, sale of the business. B, inheritance tax. C, tax efficient investment. D, HMRC error. Same way you can write your notes. Same order. You don't have to worry, break your head so much what to write, what to write, what to write. Okay? What do you have to write in the first part? Second part is VAT. First part is post-tax income and sale proceed. First is your income tax position. Next is your CGT position. Okay? So now, and mostly this area is your tax knowledge. Is income tax and CGT. So first you have to find step 1 and step 2. These are just some tutored top tips. They're telling you, they're guiding you how to answer. Okay? First find the profit, then find the income tax. For the 2 dates. For each cessation date, 25, 26, you can work parallelly. You don't have to first finish 25, then start with 26. Don't waste time. Parallelly, you can do together. 25, 26, 25, 26. Obviously, first you have to find the trading profit, adjusted trading profit. After you adjust your capital allowances and all, then only you can get your income tax. Then only you can get the post-tax income. That means after you deduct your tax from your income. And the important thing is that this 2 cessation date falls in 2 different tax years. This you have to understand. Okay? If they are ceasing the trading on 31st March 25, year is 22/4/25. If they are ceasing on 31st 26, year is 25/26. Okay? Now, remember there was one rental income also. Now, so the capital allowances will depend on when we are purchasing, when we are disposing. It is on the date of it, which year it falls. Now, so let's start with it. First, it is 31st March 2025 when we are seizing. Which is the tax year? This is the tax year. First, we'll have to adjust the profit. We have been given the profit. What is the profit? I will highlight it for you. It's in exhibit 1. No, not exhibit 1, exhibit 2. Yes. So they're generating 5,000 per month from this date. That means 24 to 25 this year. Then it increases to 6,000 per month. Okay. They have purchased it on this date, 31st March 2024. So it falls in which year? No, they have, sorry. This is the opening balance. They have purchased the business equipment for 6,000 on 1st May 2024. It falls in 24/25 tax year. Okay. So now, that's why it is 12 into 5,000. Because 5,000 is per month. You have to find the annual. You start with trading profit. Then you deduct your capital allowance. You have bought a building equipment of 6,000. Remember, AIA is 100,000. It's, sorry, 100% AIA you will get on the 6,000. So that means full 6,000 is your capital allowance, which we deduct from our trading income. And then we have a balancing charge If it's a balancing charge, we add. If it's a balancing allowance, we deduct, further deduct. Here it's a balancing charge. Why? How? See, your taxation down value, they have told it's nil already, right? Now, so the market value is 10,000. Go to exhibit 2. Now, yes. So now equipment, if you see the market value at 31st March 2025, it's 10,000. Opening balance was 0. So it's a positive, it's a negative figure. From opening balance, you deduct 10,000. It's a negative balance. This is a balancing charge. Your sale proceed 10,000. The sale proceed. Expected sale proceed, market value. When we are selling the business, obviously we are not selling the business alone. We'll sell the equipment also with the business. So this is your sale proceed when we are selling the business, right? Equipment 10,000. Balance. So more than your carrying forward balance, your disposal value is more. Market value is more. That's why it's a balancing charge. Okay, so 10,000 is the balancing charge which we add, because on that you have to pay income tax, further income tax. So this becomes your adjusted trading profit now, which is 64,000. And then on this 64,000, you need the 64,000 correctly, because on this we have to pay income tax. So only two adjustment. One is balancing charge. We often forget this. Students often forget this. They only deduct capital allowance, and other one is capital allowance. Okay. So now remember, if your figure goes wrong in trading profit, taxable trading profit goes wrong. Let's say this is 62,000 you are writing instead of 64. You are carrying this forward, and on this you are again calculating income tax. Again it's wrong. Don't worry. You will only be penalized once. You will not be penalized twice. That's a good thing about ACCA. They will only mark you wrong once. But on that wrong balance you are carrying, doing the income tax correctly, you'll be given full marks. Whatever your figure is, if you're calculating income tax correctly based on that figure, full marks will be given for that calculation of income tax. Okay, but try to make it correct. Now see as above. So you need the 64,000 correct. Now this is taxable trading profit. Do not forget, when it's taxable, that means personal allowance was not deducted, and it's less than 125,140. It's less than 100,000 also. So you adjust a net income. Less than 100 means full personal allowance you will be given, which is 12,570. This is why you need, this is pure tax, actually tax knowledge, more than ATX I would say. So deduct your personal allowance, you will get your taxable income. This is a higher balance. So basic rate is 37,700 at 20. The balance is at 40, and this is your income tax payable. Isn't this very easy? This is only for one tax year. Remember the next tax year. So now it is in the next tax year. Same way how we have done already. So when we are doing it for 2026, it will have this picture. Picture scenario changes. Then there will be no balancing charge here. You might be saying why. This is when it's for 2026, it will have an impact in 25 also. There is a note to it. You have to write a note like this. This is how you are going to get your professional skill marks. Don't write everything in the main table. Wherever you have to have some notes, keep the notes separate. See, you see the note is below the calculation. This is how you have to present. and correct dates and all is very important. Once again, we start with the trading income. So 12,500 already we have done 60. This is now 6,000. It increased to 6,000 adjusted. So 72,000 for 26. Then capital allowance 100% 6,000. Remember this 6,000 was purchased in May 24. It falls in this tax year 25, not 26. That's why we don't have anything here. So 6,000. But what about balancing charge? There will be no balancing charge here. Why? Because we are transferring, see the note, transferring the business to a connected party, to a sister. So that's why, because whenever we are transferring a business to a connected party, you can make a succession election to transfer it at tax written down value. Understood? That's why. So in 26, we are selling it as what? Going concern. We're not selling the entire business. That's why we are not having a balancing charge here. We can't have balancing. We're not selling the business. Still there. So we can't have a balancing charge. So now your adjusted trading profit for 25 will be this, and for 26 it is 72,000. You see, like this you have to write. These are your profits. Next. Once profit is done, income tax payable. Very easy. This is relating to 2026, okay? This income tax. Earlier it was just 25. So now this is your profit. This your profit is above. Your personal allowance, there is a working one for it. This working one is for this, okay? 570. Here you are going to get full amount. But there is a property income. Remember there's a rental income in 26, 25, 26, 52,000. In case you forgot, I will take back. Don't worry. Always you can go back and revisit your exhibits. It's there for a reason. So it is this 52,000 from 6 April 25. That means it falls in 25, 26. It is this rental income. That rental income you have to include in 26. It was not there in 25. Okay. So that you include. And once you include that, your A and I becomes greater than 100,000. Add 72 and 52 and check. Add 72 and 52. 104,000. It's greater than 100. That's why we have to adjust the personal allowance. Because when we have to adjust the personal allowance, it will go under working one. Label it 1, 2, 3. It follow that chronological order. You see, working one is first and then working two comes later. Then if you have 3, 4, 5 like that. So working will keep separate under workings. Working is a separate after you finish your main table. Everything. Explanation, calculation. Okay. So now personal allowance. You have to write number 1 and label the working. If there are so many workings, don't write working 1, 2, 3, 4, 5 and assume the examiner will know it. So personal allowance is this. So what is your adjusted net income now? 124,000. Add 72 and 52. Deduct 100. 24. So half of 24. This is the working. 12,000. So you deduct 12,000 from this 570. So only 570 personal allowance you can deduct according to the working 570. Get your taxable income. This is higher rate. This is additional rate. Sorry, both are higher rate. I'm sorry. So here basic rate and then the excess will be at 40%. Both are in the higher rate. And then you get your income tax for both. Since there was an income tax done regarding property income in 25, 26, there is a working 2 for it, which you have to deduct. Okay. So we'll go to working 2 and get it. What was your property income? Okay. Once again, go back there. Reread it. the annual taxable, you see the word taxable rental income. If they would have just told annual rental income, you wouldn't have to deduct the tax. That means already tax was there. They've calculated the tax on that. After they have deducted the tax, they have given this figure. Okay, this is income. You are finding the excess if you're having this extra income. So the rental income tax you have to deduct. Okay, income tax in the property income. So property income was 52, deduct normally because ANI is less than 100. Taxable income is 39. Basic rate at 20, excess is at 40. This is income 8232. So go above and deduct this from here and get your income tax, this and this. Okay, now this figure, this 33,600, there is another way you can get it, shortcut. Always try to use shortcut, and know it's always good to know the shortcut in your exam. Trust me, it works, and often it works. And for me, I always go to the shortcut because in your exam, due to time pressure, you often forget the long cut. Okay, so you don't even have to include the income tax on the property. Okay, now so there, this is an alternative method which I'm going to show you. Just work on the margin. So now, what is the trading profit? 72. 72. 52 is your rental. This is for 26 only. 25, 26. This tax year. Trading profit was 72. 72 is a higher rate, so 40%. And how much personal allowance you lost? In working one was there. 12,000, right? You lost personal allowance 12,000 because it falls in the higher rate at 40. Add both and you will get 33. So this is your income tax. You see, 33,600 and 33,600 is same. These are long cut. Now, income tax is over. Summary will show after you do CGT also. Now CGT. For CGT, you have to think about reliefs also, if it's there. Okay. And when we are dealing with CGT, take each asset separately. Okay. Gains on each asset will be taken separately. Okay. Deal with each asset separately. So when we are seizing, remember when we are seizing on this date, that means they are closing down the business. The disposal is on the building and the equipment, not the goodwill. When we are seizing it on this date, 26, 1 year later, you are selling the business as a going concern, so gain on goodwill as well you have to take. You understanding? So now, when we are selling it on this date, only two assets will come, building, equipment. Okay, capital gain. And because this is CGT, do not forget your annual exempt amount, which is 6,000, it's fixed. Okay, now, so we'll see. Okay, remember there is a working for this. How you got the 60,000? They have claimed gift relief. So when they have claimed the gift relief, okay, and why equipment is zero, we'll understand why. See, there is no capital gain or loss. It is exempt from CGT. Why? Anything less than 6,000 is exempt from CGT and it's a chattel. They are exempt from CGT. Equipment is movable. They have told you. Movable means it's a chattel. When the cost and the market value is not more than 6,000, exempt from CGT. That's why it is zero here. It has been given somewhere, in fact. We'll see. So no item, okay. Equipment is movable and no item has a cost or market value more than 6,000. Second point. Next. Building. So building is 330. Okay. At the date of gift, it was 300 because gift relief is there and original cost is 60,000. So that's why here 330 is the market value on 25. But how did we get 60,000? There's a gift relief. At the date of gift, always find the market value of date of gift, which is 300. That's been given. Now, from this 300, 60,000. 60,000 was the cost, original cost. Gain on gift held over. So the remaining that will be taxable is 240. So this is the deemed cost for ZT 60. So this 60 will be deducted from the market value at 25 to get the gain 270. Equipment exempt from CGT. Get the taxable and CGT is at 10%. Could be 10 and 20, not 18 or 28 because it's not residential property. Okay, it's 10. Why? We are selling the business. When we are selling the business, okay, what is it? The relief, CGT relief comes. Okay, business asset disposal relief, which is taxed at 10%. Now, when we are selling at on this date, now goodwill also will be there. So now, again equipment will be 0 here, same as before. Building 60, this cost will remain as it is. But this market value changes to 350. It's from here. Exhibit 2. Goodwill is 45,000, this one, market value, and this 350. Now it's 350. Cost will remain the same because it was gifted. Building has been given to the. So the base cost will be same. Annual exempt amount you deduct, taxed at 10%. Now, in this case, ZT's sister, when we are selling in the second scenario, we are selling to the sister 26. There is no gift holdover relief claim. She did not agree for it. That's why you are not deferring any of the gain. Okay. Now, all these things are over. We have calculated income tax, CGT is over. Now they have told you availability of CGT relief. One relief is there, business asset disposal relief. Please, 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 please go through this. 100% you are going to get this relief. This relief always comes in your exam, no matter what. There are so many reliefs. I think 11, 12 reliefs I've explained to you in my ATX lecture. But this one relief is so important compared to the other reliefs. So now you are selling a business here. When we are selling a business, two things, two conditions. List the two conditions. One, owning for at least 2 years. Then you are selling, or you are seizing. Okay, cease to be carried on and his assets are sold within 3 years of the cessation. We are selling the asset within 3 years after you are seizing. So in this condition, the relief will be available in both the situation. When we are selling to the sister as a going concern, or when we are selling the entire business, because we are holding it for 2 years. Check the dates when we bought the business, when we are selling. Then you will see whether you are owning it for 2 years or not. Okay. Now, That's why our CGT is at 10% because business asset disposal relief is available. Okay. Now, one more thing which examiner has told you, it's a tutorial note which I would like to highlight it for you. That is BADR for goodwill might be denied in one condition. If you have studied my lecture close company, I've done a chapter close company. I think it was lecture 23. In close company, I've told you when you are acquiring a goodwill by a close company, an individual is making a disposal. Individual is making that disposal, becomes a shareholder in the company, and they're selling it. You are not going to get this 10%. This BADR will not be applicable in terms of that goodwill. But in this case, your entire gain, even the gain in goodwill is taxed at 10%. That means BADR is available. Why? This is being sold to an individual. Business, you are selling it to an individual, not to a close company. Okay, that's why this restriction will not apply. That means BADR will be available for goodwill also. If it's for close company, if the goodwill was acquired by a close company, BADR will not apply. What is close company and all? Go back to my close company lectures and you can check. It's there on my YouTube channel under ATX lecture. Okay, so I'm not going to take your time and explain what close companies are, what are the conditions. You can go and read it by yourself. Now comes the last part, summary. They've asked you for the summary. Okay, and this requirement features very frequently in exam, so be prepared for it. That is summary of post tax, after tax. Okay, after tax proceed. So now focus on your cash inflow and cash outflow. What are the inflow? Your trading income and your sale proceed that you have received from selling the asset. Two cash inflows. What are the outflows? When we are buying the equipment and income tax and CGT. Three things. So you deduct the cash outflows from inflows. Now, so when we are selling on this date, write the two dates parallelly one after the other. This is how you present. So now, if it's a trading income for just 25, it is 60,000, 5,000 into 12. If it's for 26, this plus this 132. Trading income. Trading income is cash inflow. Then we have purchased an equipment. Okay. Whether we have purchased an equipment on this date, we are selling it, whether as a going concern or when we are selling a business. That's why we deduct 6,000 under both. Then any sale proceed. Remember, goodwill will not sell in the first scenario because we are selling just building equipment. But in the second scenario, yes, this is the market value on that date on 26. From exhibit 2 you have to take. Then building 330 market value, 10,000 market value, this 10,000. But pay careful attention here, this 300,000. Here there is a difference. If you pay close attention to this equipment, when we are selling the equipment, we are not writing the market value on that date. Sorry, building. If you see the building here, exhibit 2, you see this you are taking, this you are taking, but this you are not taking. 350,000. Why? You are selling it to the sister. You are selling it to the sister at 300,000. This value you have to take. That's why. That's why reading every piece of information and connecting them as a bigger picture is very important. You might blindly take 350, but it's 300 when we are selling to a sister. In the second scenario, selling to a sister. Okay. Then after sale proceed, deduct your income tax. Okay. And your CGT. Already we have calculated this and this. And income tax. So income tax is this, and then this we add this to 25, 26, and this is your income tax for this. Already we have done this working. CGT also you will get it. Just carry forward it here and deduct, get your post-tax cash. So now, what do you have to write? Assumption you didn't write yet. Okay. So if you delay the sale, you can tell what would be the impact. When you delay the sale until 31st March 26, what happens? See, now you are giving a conclusion, a recommendation based on this two figure. Post-tax. Which one is higher? This one. 26. So selling at 26 is better. Two reasons why. It is financially beneficial. Financially means your post-tax cash is higher. Second, it delays the payment of CGT. You have to pay CGT by 31st Jan, the following year of the tax year. So if your tax year is 25, 26, you have to pay 27 and 27 Jan. So it delays your CGT by 1 year, which is good. Okay. Now, assumption. After summary assumption, one assumption. There could be sometimes one assumption also. Even if it's one, write it. Ziti has not used his annual exempt amount. We are assuming that's why we are deducting the 6,000. Assuming he have not used the 6,000 in that year, in that tax year, both the tax year, 25, 26 or 24, 25. Okay. Mostly assumptions are based on that only. Personal allowance is not utilized, annual exempt amount is not utilized, like that. Now, first part is over completely. You see how I follow the structure? First I've done with income tax of 25, then income tax of 20. First I've done with trading profit. How I adjust to trading profit? Capital allowances I've adjusted. So once you have done the trading profit, I will show you the table here. Trading profit. Adjusted trading profit, I would say. Adjusted trading profit, I've started first. Deduct capital allowances. Second, you get the taxable profit. 24, 25 and 26. 24, 25 and 25, 26. 2 years. Then you get your income tax. Once you get your income tax, write the summary. No, then your CGT. Both years. One you get your CGT exam, CGT reliefs. Once you write CGT relief summary. Once you write your summary post-tax, it's for 17 marks. Post-tax cash position. Once that, then you write your conclusion and assumption. You see, I followed this basic structure, this order, and I've got my 17 marks. With my professional skill marks, of course. Why? Because I've wrote it in a note. I've started with the subject, to whom I'm writing, from which date. I'm writing a proper introduction. In notes, you don't have to write introductions and all, unlike reports and all. Okay. So this structure I followed. Second one is even easier. Second, third, and fourth are easier. First one, lot of workings are there. That's why that methodical approach was needed. Second is just VAT for 5 marks, 7 marks, I suppose. So next is VAT. Okay, and this is easier. Try to revise this topic. It's an area which is regularly asked. Now, because they are ceasing to trade, that means you have to see that you have to deregister for VAT, because they are VAT registered. In both cases, in fact, they have to deregister for VAT. Okay. So what is the difference? So the tutor says the difference between the two options is, when we are disposing on this date, this is not a transfer of going concern. So the output VAT would be payable. And when we are transferring this on this date, this is a transfer of going concern. So no output VAT is payable if certain conditions are satisfied. Now, regarding building, there are special rules for building. This only you will know when you have covered the 2 lectures of VAT that I've covered. So the question has confirmed that no option to tax has been made. Building is more than 3 years old, exempt from VAT. Now, same way, when we are selling on the state, when we are selling on the state, you have to write proper subheadings like this. When we are selling, the date, very, very important in taxes, date. Now, at what rate VAT will be charged when we are selling the business? Standard rate, 20%. So this is on equipment. See, when we are selling the business, goodwill will not come, only equipment and building. For building, there's a separate rule. That's why on equipment, VAT will be charged at 20%. What about building? That's why equipment one paragraph, building separate paragraph. Follow this space. One is talking about equipment. Write about equipment because it's very easy. Then talk about building. Easy thing always write first. This is the easiest approach in your tax, I would say. Easiest thing which you can write in 1 or 2 lines compared to lengthy answers which you have to write in 3 or 4 lines. Always write the easiest one first, because in case at the end if you run short of time, at least you have covered the easiest part and got the score the marks, right? Building is little, you know, there are rules for it. What is it? When we are selling the building, so the sale of the building is an exempt supply. Why? It's a commercial building, you have to see, not a residential. There's a rule. If it's a commercial building and is more than 3 years old, no election has been made for it to be taxed. So it's an exempt supply. Next, when we are selling for 26, again, this time we'll have two things. Goodwill also. Equipment, goodwill and building. Building separate. Equipment and goodwill you can keep together. Because on this date, goodwill is there. So, straight, same like before. 20% VAT will be charged on equipment and goodwill also. But unless the sale qualifies as a transfer of a going concern. Okay. Next, when we are selling the business, so now we are selling the business as a transfer of going concern. For this, what is the VAT? There are following conditions which has to be met. You have to list all these conditions. How many conditions are there? Four conditions. Business has to be a going concern. Sister must use the asset to carry the same kind of business that was carried by Ziti. Sister also must be VAT registered. Okay. Next, no significant break in trading before or after you are purchasing the business. If these 4 conditions are satisfied, business will be regarded as a going concern. Okay. Now, that part is over. B, inheritance tax. Here, some top tips for you to deal with these questions. Okay. We'll go through the tips before we actually start working on the question. Why do I go through the tips? So that in your mind you frame an answer. It's easier for you how to follow. It's an approach. Okay. Now, question also gave you a hint. What is it? Identify the days on which IST liability would change. You have to see whether 100% BPR is available or not. Okay. If Ravi dies, Ravi is the father of Ziti. Okay. If Ravi dies while Ziti is still owning the business. Next. However, if Ravi dies after Ziti has sold the business, then no BPR would be available. If Ravi dies after Ziti has sold the business, no BPR will be available. Okay. So now you have to see if Ravi continues to survive for a longer period, that means more than 7 years, impact on inheritance tax. So for every consecutive year, IST would reduce by 20%. That is the TAPA relief. Okay. So now These are the 4 different periods you should have identified in your answer. 2nd June to 31st March 25. See, your year end is 31st March. Why 2nd June? They have given you the date. We'll go through the dates again. Regarding inheritance only. It's there in Exhibit 3. You see 2nd June 2024 to 30th June 2027. It's a big time period. So from 2nd June 2024, that's the starting. Okay. So from 2nd June, 31st March. Okay. Then from 1st of April, the next date, till 30th June 2025. That means every year June you have to take. Why? Because year end is June. Okay. So then from 1st of July, then it will follow a year. 1st of July to 30th June and 1st of July 26 to 30th June 2027. This 2 year is normal. It follows one whole year. Okay. Here the time periods varies. Now, so from 2nd June to 31st March 2025, this period Ziti is still owning the asset. So because it is still owning the asset, 100% BPR is available. 100% PPR is available means no IHT. From 1st of April 25 to 30th June 2025. Here, no BPR is available because DT has sold the business. When did they sold? 31st March 2025. So on 1st April 2025, that is day after that, because DT has sold the business, no BPR. You have to compare the dates. So IHT will be payable, but it will be reduced by a tapper relief. What is this tapper relief? This you have to find out based on the number of years. That number of years is based on when we are gifting it to Ziti and the date of the Ravi's death. It's between 4 to 5 years. Between 4 to 5 years. Okay. So when they are gifting it to Ziti and when is Ravi is dying. This will check again. Because by the time you come here, you forgot the date. Very common. You must have forgot the dates. Like how I forgot. So now, this is the father's death. 2nd June. These are the date of. So you are gifting it. Okay. When was it gifted? Okay. So now, you see, 2nd June 2024. Now, here. So the period between gift to the Ziti and the date of Ravi's death is between 4 to 5 years. Then taper relief is 40. We'll see how we calculated the years later on. Next year when we go, it increases to 60%. Taper relief is more because now they are living for 5 to 6 years. And then later it's even 1 year each time, and it increases by 20%. That means you have to pay lesser and lesser IST. Okay. So now you see this is the summary. You are calculating IST. You're writing all these 4 dates. Now there are notes for it. 1, 2, this and this. Because first time full BPR is available, that's why 0 IST. The second year, you see this pattern. First it was 48 something, then it's 32 something, then it's 60. Because taper relief is increasing as Ravi is surviving more, IST is reducing and reducing. As the death is approaching, as you are dying later and later, taper relief is more and more, IST is less and less. So first we'll read first note. If Ravi were to die while Ziti is still owning the business, 100% BPR, so no IST. Okay? Because this was an unincorporated business which was being transferred and it was owned by Ravi for at least 2 years. The condition is required for BPR. Next note. 1st of April 25 to 30th June 2025. Here, BPR is not available. That means BPR will not be available for others also. Because Ziti does not own the business when Ravi dies in this case. So in this case, he does not intend to reinvest all the proceeds into the replacement. Rather, he's not even reinvesting the proceed into the replacement business property. That's why BPR will not be available. But taper relief will be available. When? If Ravi is surviving the gift by at least 3 years. 3 years have to pass from the date Ravi has given the gift to Ziti. If Ravi is dying before 3 years, taper relief is also will not be available. But since Ravi is surviving, taper relief is available. Okay. So remember, there is a shortcut to this. You don't have to calculate this every time. This value transfer, all those things. Okay. Just get it once. This inheritance tax correctly. You can do it for the other 2 years very easily. Okay. But that's why working 3 is very easy. First and 2 1. This 2 are based on this 88,800, this figure. Calculate this correctly and you will get additional taper relief. See here. When was it that it is gifted? It is gifted in some 1st July 2028. The date it was given. The date of the gift. Those are the date of the deaths. 1st July 2020. It was given. 1st July 2020. So from 1st July, some issue with this. Oh God. Okay. So some issue with this, that this is not working. Okay, let me fix this issue. So from 1st of July 2022, the date of death. First one is not relevant because BPR is available. Second one, 30th of June 2025. So if you see, it's within 4 to 5 years from 20 to 25, right? Now, next. So it's just 1 year addition to each year. So this 4 to 5 will become 5 to 6 and then 6 to 7. Okay, if you check from 20 onwards. So now you have got, now we'll calculate the inheritance tax. So you need first, what is it? What is the starting point in inheritance? Is value transferred. Remember annual exemptions. There are annual exemptions in IHT, brought forward and the current year. So now for what are the three, this thing, 4,309,000. We'll see. Okay, 4,309,000. That is from the exhibit 2 you will get. Now, what is it? Market value at the time of my father's gift. When you are calculating IHT, it is fixed at the date of gift. So goodwill is 40,000, building is 300,000, and equipment is what? 9,000. This is what you have to take. Okay. Now, so 4,309. Add, deduct your annual exempt. It was given at 1st July 20. So it falls in the tax year 2021. So 3,000 from here. Annual exemption is 3,000 for the current year, and the previous year brought forward 6,000, assuming annual exempt was not utilized. So 6,000. Next, nil rate ban is 325 because we have a gift that was made to a trust of 190. In case you forgot, go back and check. This is why we need that gift within the 7 years, so that we want to know whether we have utilized our nil rate band or not. Okay. This 190,000. Okay. 1st May 2016. Gift was made 20. So it falls in within 7 years. So it will utilize the nil rate band 325,000. Okay. Now, so what, from this you have to deduct same. This was, if you check the 7 years before, 1st July 20 up to 1st July 2013, any gift within this period you can take. And this gift was done in 2016. So 16, 17, 15, 16, annual exempt, you have to deduct. Do not forget, it's a chargeable transfer. You have to deduct annual exempt. Even if it was pet, annual exemption you have to deduct. Okay, you deduct. This is your available nil rate band. You deduct, you get, and you get your taxable amount. On this, you pay 40%. This is your inheritance. And because you are getting a tapper relief from 4 to 5 years, if you check the table will be given to you in your ATX exam. What is the tapper relief for each year? 4 to 5, it is 40%. So 40% on this value further deducted and you get your inheritance. So every year what you have to do on this 8800, just keep on increasing the percentage. Okay. So here this, this. Wait, there's a mistake that has been done. This is supposed to be okay. 40, 60, 80. See, these are the tapper relief. Okay, but when we are taking the IST is the reverse of it. Okay, this at 20, this at 40. So see, tapper relief will increase. 40 becomes 60 becomes 80%. But in terms of inheritance, it's reducing. Okay, inheritance you have to pay 40% of that amount and 20% of IST. This one. That is, see if 80%. Okay, see this is tapper relief 80%, right? So on 8800, if you take 80%, it is 64,640. This is what you have to deduct from 8800 further. So rather than deducting like that, just take 20% of IST. Rather than deducting 80% of tapper relief from 8800, straight away take 20% of 8800. It's easier. It's the same. 8800 minus 64,640 will give you this amount only, which is 20% of your IST. Same, 40% of your IST is this. Rather, if you deduct 60% of tapper relief from 8800 minus 48,480, you will still get 32,320. It's the same way. So do not get confused with why this is 60% and here is shown 40 and why it is 80 and 20. This is IST, this is tapper relief. Okay. So that's it. That's what we are writing the summary here. This, and this. Nicely you are writing summary, date of death, one column, notes, second column, liability, third column. This you can do in Excel sheet. All these notes you can write in Word. Referring to, you can say please refer Excel sheet. The summary in the Excel sheet. Like that you can write because we are doing it on a CB platform. With this we have finished our inheritance tax also. So the hardest part we have finished, thank God. Now you can relax, take a deep breath. We are in C and D, tax efficient investment and ethics, the last part. So C is tax efficient investment. You have to discuss EIS or VCT. Do not waste your time talking about CGT because the question already asked income tax. When the question specifically tells you income tax, it is income tax. When the question says taxes, all taxes, then you have to talk about income tax, IST, CGT, all those tax. Where, okay, You can even talk about income tax relief also if it's available. And if you are receiving any dividend under the schemes, how it will be dealt. Okay. So here, first, let's talk about VCT. You have to know the rules. This is pure knowledge, nothing new. So VCT, your income tax liability will reduce by 30%. What was the amount you invested? 25,000. So take 30% of 25, which is 7,500. Income tax will reduce by this amount. It is same for EIS, thankfully. So wherever it's same, do not calculate again 25 into 30 and waste time. Only fools do that. I'm sorry to use my words. Smart, wise candidate always follow up rather than wasting time. If it's same, they would write it would be same. Okay, next. But now we are moving on to the reliefs. See, this is income tax relief. Keep income tax relief separate. Keep dividend received separate section. Okay. So under income tax relief, if everything is invested in EIS share, you can carry back all or part of the relief could be carried back to 25-26. 1 year back you can carry back. 1 year behind 12 months. It was in 26-27, right? You can carry back the relief to 25-26. But this carry back is not possible in VCT. You see the difference? What is the same thing? One same thing is 30% tax relief. Difference is you can carry back the relief 1 year back in EIS, but under VCT you can't carry back. Now moving on to dividend received. Under for VCT, dividend received are not subject to income tax. But for EIS, EIS shares are taxable for any dividend income. Now moving on to HMRC error. D. Ethics. This needs a logic. This needs an order. Ethics looks very easy. Trust me, when we are studying, looks very easy. Okay, I will answer it. Like a big shot, we all go. But when we come to ethics, it's actually hard to use the words come up. If you go through all the ethics questions, just ethics question, please pick up question number 1, section A question of ATX, 4-5 papers. Only pick up the ethics question, 5 marks. You will see there is a pattern of answering. It is usually 1 line or 2 lines in each para, keeping some space, and the order it follows is usually same. That's why ethics is very easy if you follow the order. So, which I'm going to tell you here. Okay, so this is the last part, and then we are ending with it. We will be moving on to the marking scheme, how we get the professional skill marks, and also the examiner's report we'll go through to so that I can navigate you through the mistakes that candidates often do in this type of question. So HMRC error. You should always start by referring to we. Don't say I. I does not sound professional. Use a we. You are a tax advisor or a tax senior official. You are advising to your client, Ziti. You should say in a very polite language what they have to do, what are the consequences if they don't do these things I can do against these are the rules, these are the legislations. You have to say like that. So first, always start by referring to investigation. Whatever the ethics question is, we should investigate that tax affair. Whose tax affair? Ziti's tax affair. Mention the name of the company. First, you have to check the validity. Do not just straight away jump to the conclusion, okay, this is unethical, this is ethical. Don't say that. Avoid such language. They told there's a amount of 5,000 that you got from the bank, but you if you have to refund it back, you have to see whether there's a valid reason for that or not for refund. That's why you have to determine that first. Who should do that? You should investigate because you are the one who is solving it. Okay. First, investigate. First mark. Second para, second line, keep a space will be in between. If you are unable to do that, so if you are able to do that, don't say if you are able to do that, because then you don't have any answers to follow through. No, if you are able to do that, you will refund. Finished. So you should always start by saying if you are unable, if we are unable, look at the language they are using. If we are unable to identify the valid reason, so the receipt of this 5,000, this is what you are referring to the case study. You're not using general answers in ethics. You're using the receipt of 5,000. This receipt of 5,000 you have taken from the case study. So the receipt of this 5,000, then you have to disclose to HMRC. You immediately do not start by referring you have to disclose this to HMRC. I have to disclose this to HMRC because it's unethical if I don't do. Then you have to pay financial consequences are there. You don't have to write all this. Follow this order. You will get your full 5 marks with the professional skill marks for ethics. So the receipt of the 5,000 must be disclosed. If you are unable to identify the reason for refund, this has to be disclosed to whom? Write the appropriate party. It's always HMRC. And repaid. Not disclosed, repaid also as soon as possible. So disclosed, repaid. Second point. Third, this order, if you follow, you will never get wrong in ethics. Ethics will be easy for you. Ziti can inform HMRC himself. This is next. Can inform HMRC, or he may authorize to do. He may see Ziti himself also can inform HMRC, or he may authorize us to do that for him. However, we must not disclose the error to HMRC unless we have this permission. See, Ziti can inform HMRC. He does not need anyone's permission. But if you have to disclose the error to HMRC, first you have to get the permission from Ziti. This is point number 3. You can't disclose the error to HMRC unless you have gotten the permission. Fourth, it's always like this. The matter might be different, but first you have to investigate. Then you have to, if you are unable to identify the reason, you have to disclose. Then you have to get the permission from the client. Fourth is, if not, you have to cease to act for that client. This is the order. And there are criminal proceedings. So these 5 other reasons I will tell you. Fourth, we cannot continue to add for Ziti unless this disclosure is made. If this disclosure has to be made, unless this disclosure is made, you cannot go further. You can't add for Ziti. That also you have to write. Next. Don't say if Ziti accepts to notify HMRC. If Ziti would have accepted to notify HMRC, there will be no issue for you. The issue comes when he does not accept. So you always have to go against. Ziti is always going against HMRC. Ziti is always going against your ethical values. You should always present the case like that. Not Ziti, whoever the person is in the case study. So here, if Ziti refuses to notify HMRC and repay the money, which is very common scenario, always take the common area. Very few people would actually notify HMRC or repay the amount. But most of us, we are selfish, okay? We are greedy. We don't want to repay the money. We will not notify HMRC, so we'll always go by that situation. If Ziti refuses to notify HMRC and repay the money, then what must you do? The question is about what must you do? We must cease acting for him. Not only cease acting for him, you should advise HMRC that you are no longer going to act for him without disclosing the reason. This is point number 5. And if you are not disclosing, remember you have to give the consequences also. Non-disclosure of this error is a tax evasion. Same to as tax evasion. This is a criminal proceeding, both under tax and money laundering legislation. So these are the steps that you have to follow. First, investigate the matter, whether it's true or false. Next, once you investigate, must be disclosed. You have come to a conclusion after investigating, the matter must be disclosed to HMRC in most cases, because this is tax. You are not disclosing it to your employer or someone. If it was some other case like financial issue or audit, you might be disclosing it to your shareholder. But in this case, it's tax, so we'll notify it or disclose it to HMRC. Next, third, permission from client. Once you have decided it must be disclosed to HMRC, permission from client to disclose. You have to get this permission from client to disclose to HMRC. Otherwise, you can't disclose. Once you get the permission, you don't get the permission, okay, can't act for client if disclosure is not made. 5. Then, once you are not acting, you have decided you can't act for the client. You have decided it's not up to you. You have to notify HMRC. HMRC that you're not acting without disclosing why. Without why. Don't give reasons why you're not acting. Just write you're not acting for this client any longer. That you have to disclose to HMRC. Next, last, criminal offense. It's a criminal offense. If you're not disclosing it, it's a criminal offense under both tax and money laundering legislation. That's it. These steps, if you follow in any ethics, you will get full marks. And language and all, we must do this. You must notify HMRC. If not, this happens. Professional skill marks will anyway get along with it. Along with technical marks, you are getting your professional skill marks also. So do not worry so much for professional skill marks. That's it. We have finished the question. Coming to the examiner's report. Take your own sweet time. It's there in your revision kit. I'm not going to read sentence by sentence. I'm going to tell you the main points. Okay. So first part, as you know, disposing business divided into 2 requirements. It is worth 17 marks. Huge amount of marks is for the first one. That's why you have to structure this question in a very methodical order. Okay. So now, some knowledge like capital allowances were your tax knowledge. Okay. Now, most candidates identified AIA, 100% AIA, that is 6,000, but they have omitted, what is it? The story through to the disposal, that once you dispose, there will be a balancing charge that arises, 0 minus 10,000. Remember that 10,000 of equipment? I've told you this was left out by many candidates. Okay. What did weaker candidates do? They prepared a very lengthy calculation of capital allowances, that big table. Remember, main pool, special rate pool, tax written down value, allowances. Then we write AIA, FYA, all those things not needed. In order to arrive at that AIA of 6,000, this is not needed. Okay. You just need one line of capital allowances. That's it. That lengthy calculation of capital allowances was not asked. It would be asked when there were so many assets given to you with different rates, with different carbon emission like cars, equipment, plant and machinery, purchased at different dates. Then you might have required a lengthy capital allowance table. Now it's not required. It's just one equipment worth 6,000. Tax written down value was 0. So full 6,000 you will get. Now, so the personal allowance and income tax was done well by many of the candidates, thank God. And regarding capital gain tax, when we are selling the business, this is very straightforward. This is also done well. But there is one common error. That is, we are treating the sale of the business as if we are selling a single asset. Okay? We are selling the individual assets of the business rather than selling individual single asset. Okay, so when we are calculating a gain, chargeable gain, we have to take each asset separately. You can't group all the assets and take it as a single disposal, because the rates might be different. Okay, so now many candidates, what did they conclude? They told CGT was same regardless of the method of disposal that took place. If you are selling to the sister also is same. If you are selling it entirely also is same. It's wrong. Why? Because when you are selling the business as a going concern in the second year, there's a disposal of goodwill. In the first scenario, no disposal of goodwill. That's why the disposal proceed was different. That's why CGD will be different. But now, what's next? If you go through the summary is nothing new, no new information. Everything is brought forward. Figures from earlier calculations. You're bringing it in one place. To score that maximum marks, you need it. You might say, okay, calculations I've done before is there. Examiner will say, no, you have to bring forward the summary, bring forward the calculations in front. Okay. So what do you have to show in the summary? Your trading income, proceeds from the sale of that asset, both income tax and CGT. These four things you have to show in the summary. Any non-cash items you have to exclude. Okay, very few candidates score that 3 marks. Summary should be the easiest one. In fact, if you have done the lengthy one, summary is nothing. Second part of A, that is VAT, was done well. Okay, sorry, second part of A is sale as a transfer of going concern was done well. Now, the second part, part B, was inheritance tax. This was done well. Okay. Now, if you're gifting a business, because you're gifting the business to the son, many of the candidates identified it's a pet. That's why, because it's a pet, it becomes chargeable based on the death of the donor within 7 years. Okay. They were also able to deal with annual exemptions also, nil rate ban also correctly they have done, tax rate and tapper relief. All this was done well. One area where students did not do well is BPR. They have omitted this altogether. This relief is very significant. You should be aware of it always whenever inheritance tax is there. Because most of the time inheritance tax is given when you're selling a business, and selling a business BPR usually comes. Okay, that's why you have to often slow down in your exam. Make sure that you go through all the reliefs. Okay. Now, so when we are calculating inheritance, this has to be there. Valuation of the asset at the gift. Are you taking the reliefs? If it's a relief, no IST. Then any exemptions, marriage exemption, small gift exemption. Here you just have annual exemption, followed by new rate band, tax rate, tapper relief. Okay. Now, some they included BPR, but they failed to realize that if the business was sold by Ziti, who is the donee, before the death of his father, then BPR will not be available. Father dies before Ziti is giving the gift, BPR will not be available. Why? What is the rule says? Donee has to own the asset gifted to him at the death of the donor's death. When Ziti's father is dying, at that time Ziti has to own that asset for for him to claim BPR. Now, now most of the students forgot about the gift that was made on 1st May 2026. It was a chargeable lifetime transfer to a trust. They thought this will not affect your nil rate ban, but in fact it will affect. Why? Because it was made within 7 years. Because they thought that this was more than 7 years prior to the death of the donor. But it is not at the death of the donor. You have to see CLT was made within 7 years of the gift of the business. When are we gifting this gift? On 1st May 2016. When are we gifting the business? 1st of July 2020. From this date onwards, you have to check. From 1st July 2020, you have to go 7 years back, not from the date of death, to see the nil rate ban available or not. This mistake often students do in IST. Okay. Now, Third part, where we have to compare EIS and VCT. This is also good. Majority students have done good and score them full marks. But most of the students, please do not make this mistake. They wrote everything about the scheme, whatever they know. Also about CGT exemption also. What are the rules for the company in order for the investors to qualify for the relief? All these are not asked. Only the income tax was asked. Okay, you will not get any extra marks. Now, that's it. Coming to the marking scheme, 17 marks as we have told. So the 17 marks, how it comes? First, income tax position, trading income 1.5, capital allowance 3 marks, income tax payable when we are seizing on this date 1 mark, when we are seizing on the next date 2 marks. Of course, in this date workings are more. Income tax on property income, that 52,000, and that income tax was 1 mark. Often students miss out on this one. Then CGT, capital gain 3.5, tax 1.5, availability of this relief is 2 marks, summary is 3 marks, and assumption is just 1 mark, one assumption. Next part, VAT, when we are selling it 1.5, when we are selling on this date it's just 1 mark. If it's a transfer of going concern, we don't charge VAT, otherwise we charge VAT. And there are conditions for it, whether it's a transfer of going concern or not. 3 conditions, 3 marks. 1 mark each, 1 mark for each condition. So maximum 3 marks. Next, part B is for 9 marks. So death before the disposal of business, 2 marks. Now, to calculate IHT, value of gift, 1.5. Annual exemption, 1 mark. Business property relief, 1.5. TAPA relief, 1 mark. Nil rate ban, 1.5. Inheritance tax liability, 2 marks. Then, EIS versus VCT, 4 marks. Then, necessary to disclose, 4 marks. Implications of failing to disclose, 2 marks for ethics. And professional is 10 marks. We'll see below how you get that professional skill marks. Okay. Communication, as I told you, follow the general format, that is meeting notes, use headings, subheadings. Next, use the style language as I told you, professional. Okay. Present your calculations. Keep your answers specific, not general. Okay. If they are giving you some specific instructions, follow those instructions. For example, dates. Identifying particular dates that would impact IHT liability. Next, analysis. How do you analyze this? For calculations, you are taking numbers from various areas. Okay. Then, to get income tax implication, you are using the information. Then, to demonstrate all taxes, income tax and CGT, how you are demonstrating all those. That's your analysis skill. Skepticism. Annual exempt amount has been used or not. That is skepticism. Considering the possibility that HMRC error is not an error. At least you are seeing the possibility. It could be an error, it could not be an error. That is, you are showing your skepticism skill. And taking actions if it is not willing to disclose the error. What is the action you would take if it is not disclosing the error? That is skepticism skill. Last but not the least, commercial acumen. Here, recognizing that disposal of goodwill will only arise when you are selling the business as a going concern. That is, when you are selling it to the system in 25-26, not 24-25. That is commercial agreement, number 1. Number 2, identifying capital gain tax relief and inheritance tax relief. Then, different VAT treatment depending on the date of sale. Then, last, IHT treatment depending on the date of death. These are all your commercial acumen skills. So that's it. for this question. I shall see you in question number 3. And if you haven't become a member yet in my YouTube channel, please do become a member and please do share these videos. And if you share this video, they might not be able to see unless they join my channel and become a member. So please tell your friends if you're a member so that they join my channel and become a member and watch these videos. Because the time is very short, it's just 1 month left for your ATX exam. Best of luck and take care.